Welcome to another video. If you're new to the channel, I would like to introduce myself. I'm a top author on the TRADINGVIEW platform, and I'm a swing trader as well as running an educational company in which I teach my students how to trade my strategies. In this video, we'll be making some multi-time frame analysis breakdowns, and you will gain more of an insight on how you're supposed to approach the market from a multi-time frame analysis perspective. So it will be very educational as usual. Without further ado, let's get straight in the video. Okay, so let's take gold as an example to make some free analysis and education for all of you. So first thing, if you look at the most recent price action here on the monthly time frame, what you can clearly see is that the market has created this overextended W formation. Now, why overextended W formation? Because when you have a W formation, usually the market will end up inside of this area here. So in between the neckline, that is basically the previous resistance, now turned support, and the first high that started the move to the downside. So usually the market is supposed to end up from here towards something that is around this area here. So around the 50% retracement of the Fibonacci on this impulse leg. Now in this particular case, the neckline was very high, and when the market will create a neckline that is very high, then that is when usually the market will create an overextended W formation, breaking above the previous high. So as you can see here, the market ends up in this zone and starts the pullback to the neckline. But on the other side, in this particular case, the market starts the push to the downside from the high that the market has created, and then goes to the neckline. Now, since we are applying this to live market conditions, what you can clearly see is that if you take your Fibonacci from the low to the high, you will see that the market basically already hit the 3T2 Fibonacci, and this is very important. First of all, you need to understand how you're supposed to use your Fibonacci in the case of a retracement. If you basically want information on a retracement in the market, you need to take your Fibonacci from the low to the high of the impulse. And by doing this, you will identify the strong zones that the market will encounter in its way to the downside: the 3T2, the 50%, the 61.8, the 78.6. These are basically the important Fibonacci levels that the market will encounter in its way to the downside. So the first target was the 3T2. At the moment, the 3T2 is already achieved, and I will also show you in this video how we took the short on gold so that it will be educational and showing you how you're supposed to approach the market. Now, at the moment, let's determine our second target. Our second target from the monthly time frame will be just above the 50% retracement. So going down on the weekly, let's see what kind of price action we're getting. So on the weekly time frame, we immediately realize that this kind of target here is a target that makes a lot of sense. Why am I saying so? For the simple fact that if you look left, okay, so if you look inside of that zone, this target here was clearly previous resistance here. The market rejected it twice, then it broke to the upside, went for a retest of the area, and continued to the upside. So this is a clear level that the market likes to respect, and you can clearly see it. So the market loves to retest this kind of zones. It's very important to say this. Then what you also realize from a weekly perspective is that the market has broken with this very nice impulse to the downside and started a retracement. And from this area, the market is supposed to continue to the downside to the overall target. And you can also see that we do have some previous support to resistance around this area on the weekly time frame. The market had found support here, and that support is now turned resistance. So going down on the daily time frame, what kind of price action we're getting? So first of all, if you remember, if you basically are following me on TradingView, I told all of you when the market was around this area to be looking for short positions. So let's see some of the concepts that we applied with the students to actually take this trade, because I always make directional analysis, but then obviously the entry is reserved for students that know the rules and that get my daily market breakdowns each and every day. But I want to show you some of the concepts that we applied with them to actually take this short. So first of all, we need to look at what the market was doing at the time. So let's use the replay tool. So the first thing that we knew that we were looking for shorts, that is for sure, but we still don't have any kind of structure to take this trade, so we needed to wait. And we just kept monitoring the market every 4 hours, and that is a very big advantage of our swing trading strategies, that basically we only need to monitor price action every 4 hours. So basically every 4 hours you need to just check how the 4-hour candle closed, and it only takes 3-4 minutes to actually check it. So you really don't have much screen time when you're trading our strategy. Then at this point you realize that, okay, but I have the possibility, I had structure here, so I have the possibility to create this head and shoulders pattern, or at least to go for a retest of this structure level. This is only from a structural perspective. We have a lot of other rules that are part of the strategy that I can't show you, but what I can show you, because I know that it can improve your trading, is that you need to know how to read a market structure and price action on multiple time frames. And here on the 4-hour time frame, we already know the direction. We're only looking for how to take the entry, how to put our stop loss, and regarding the take profit, we already know it from a monthly time frame. We already know that we're targeting the 382 Fibonacci from the monthly time frame. So basically, as soon as we know this, there are many other rules that we're also satisfied, but keeping it simple from a structural perspective, you can expect a retest of this previous level of resistance here that will again be turned resistance. So what you can do, you just take your Fibonacci from the high to the low of the weekly time frame, and of the 4-hour time frame, and you realize that basically the 50% is the one that is aligned better with this area of resistance, and that is the area in which we put our sell limit with a stop loss above the high, the 4-hour high, and take profit at the monthly lows, at the monthly 382, because as we know, we were targeting the monthly 382. So taking our Fibonacci from the low to the high of the monthly time frame, we were targeting just above the 382 of the monthly. So going down on the 4-hour time frame, this is what our trade looked like. Basically, we were targeting the 382 with an entry at this area of structure with a stop loss above the high. And the next candle, basically what happened is that the next candle triggered our order exactly, and then just started the impulse to the downside in a very aggressive way. And this is basically a very simple concept in the market. You always need to be able to read a market structure, and price action is very, very important on multiple time frames. And there are a lot of other rules that were satisfied, but I can't show you everything. But what I can show you is this, because this I know that they will improve your trading. And obviously then if you want to learn other rules, you can always join the mentorship program. Now let's speak about what is supposed to happen now in live market conditions. So at the moment, what we expect, we already said it, we're expecting we're expecting continuation to the downside, and we're expecting continuation to the downside to this level here. And we clearly have an impulse correction, and we expect the next impulse. So let's take our Fibonacci from the high to the low, because as we know, if we want information on the retracement, we need to take our Fibonacci on the impulse. And what we can clearly see is that the market has rejected the golden ratio already, so 0.618. It has already rejected the golden ratio and started a push to the downside. Another thing that we can notice is that the market has broken below this level here of structure, as you can clearly see, broken, and is now retesting it. There was structure because here on the daily you can see that in all of the retracement, this is the only red candle showing that the market was interested in this area. So at the moment, what we are doing, I can't show you my rules for entry because obviously those are reserved for the students that know the strategy and know what we're looking for, as well as getting my daily market breakdowns. What we're looking for is one of our valid entries inside of this area for this push to the downside. If the market will provide one of our valid entries, then we will be taking this short to the downside. If it will not provide a valid entry, then there is probability that the market will just continue the push to the upside and we will not be involved in the trade. So we are monitoring price action on the 4-hour time frame for this push to the downside. If the condition will be satisfied, we will be taking the trade. I hope you enjoyed the video. If you did, make sure you smash that like button. It really does support the creation of more free analysis and education for all of you. Now, if you still haven't, make sure you go check out the mentorship program. It is a very complete program. Every day I send a new market watch list showing all of you how you're supposed to apply the strategies that you have already learned from the video sessions. Because first, I give you all the education and teachings on how you're supposed to apply the strategies. So all the rules of the strategies, how they work, and everything you need to know about them. And then every day I send you a new market breakdown showing you how you're supposed to apply those strategies to real market conditions. And that is the only way in which you will actually ever learn a strategy, because you need someone that shows you how you're supposed to actually then apply it. And I also answer all the questions that my students make each and every day in the daily Q&A session that you basically will get each and every day directly on your students' dashboard. So make sure you go check it out, and I will see you all in the next video.